The current live price for Motorsport Games Inc., trading under the NASDAQ ticker MSGM, is $3.76, reflecting an absolutely staggering intraday increase of 71.69%. To put that into perspective, this stock closed yesterday at $2.19, and the market has effectively re-rated the company's entire valuation by merely 3/4 in a single trading session, an almost unbelievable surge that is fueled by one core crucial development that the market is finally and aggressively pricing in: a sustained, genuine turnaround to operational profitability. The common expectation for MSGM for a long time has been one of skepticism. This is a microcap gaming stock that has struggled for years with high development costs, delayed product rollouts, and the perennial risk of delisting from the NASDAQ, making it the kind of volatile, high-risk equity many investors, especially those using platforms like Schwab Intelligent Portfolios or a more cautious Fidelity account, would traditionally avoid. The widely held belief, if it was even on most people's radar, was that this was a deeply distressed asset, perpetually burning cash and clinging to life with the promise of future releases. That was the expectation. The reality, delivered just yesterday afternoon in their Q3 2025 earnings report, is that this struggling small cap is not only profitable, but is showing robust and accelerated revenue growth, driven by a strategic pivot, essentially proving the critics wrong in the most dramatic way possible. The core of this unexpected reality lies in the Q3 financials. Motorsport Games reported total revenue of $3.1 million, which is a massive 71.9% increase year over year. More importantly, they announced a net income of $0.8 million, successfully reversing a net loss from the prior year's quarter. This is not a fluke. This marks the second consecutive quarter the company has achieved operational profitability. For a small gaming company that has been walking a financial tightrope, this shift from chronic losses to actual, sustained profit generation is the kind of event that triggers a massive, explosive repricing, which is exactly what we are witnessing with today's monumental trading volume, which has already exceeded 92 million shares, orders of magnitude higher than its average daily volume, confirming this is a full-scale market re-evaluation. The surge is a low-float, high-volume parabolic move, typically indicative of short-covering panic combined with fresh retail and hedge fund buying interest suddenly rushing in to capitalize on the news. This dynamic is a classic tension between the old bearish market narrative and the new materially positive financial reality. Looking closer at the source of this sudden financial strength is essential. The significant revenue growth is almost entirely attributed to the success of their title Le Mans Ultimate. The revenue from this game alone has essentially replaced the former revenue stream from their older, now terminated NASCAR license, signaling that the company's internal development and product market fit have finally stabilized and found a profitable footing. This is critical for any technology or entertainment company, as it shows they can successfully execute on their core intellectual property. The company's gross profit margin also jumped significantly to 80.7%, a stunning figure for a software publisher, up from 60.2% last year. Such a high margin suggests that the cost of generating that Le Mans Ultimate revenue is remarkably low, indicating strong operational leverage. The market is now looking at a company that has proven it can generate high margin profit, a profile that is far more appealing to an individual brokerage account or even sophisticated funds compared to the former cash burner status. The cash position is also much healthier. They generated $2.3 million in cash from operations in the first 9 months of the year, boosting cash and cash equivalents to $4.5 million by the end of October. This level of cash generation and liquidity give the company much-needed runway and dramatically reduces the risk of further dilutive financing, which has been a major overhang on the stock. This improvement in the balance sheet is what changes the fundamental risk profile of MSGM, pushing it out of the ultra-speculative bucket and into a category where growth investors might take a serious look. In the broader context, Motorsport Games Inc. is fundamentally a developer and publisher of motorsport-themed video games and organizer of corresponding esports tournaments. They operate primarily in two segments, gaming and esports. Their business model centers on acquiring official licenses for major racing series, like the 24 Hours of Le Mans and the FIA World Endurance Championship, which powered their successful Le Mans Ultimate title. They monetize through initial game sales, downloadable content, and their service platform, Race Control, which provides subscription-based features and competitive services. This niche focus in the sim racing subsector of the gaming industry gives them a loyal, dedicated audience, which is very different from the mass-market casual gaming giants like those who might compete with a Tesla stock or Apple stock for investor attention. The sim racing community values authenticity and technical depth, which their titles, developed by Studio 397, are known for. Their historical performance has been choppy, marked by the financial drain of previous unsuccessful game launches and the termination of their NASCAR license, which forced this recent painful but ultimately beneficial pivot towards their own internally developed IP. This context of financial struggle is why the market was so cynical, and it is precisely why this turn to profitability is so surprising and potent. The immediate reaction to the earnings report yesterday, interestingly, was not this explosive rally. The stock initially fell by almost 5% in the aftermarket session after the announcement. This is a classic short-term market inefficiency where initial cautious investor reaction or broader sector weakness, perhaps tied to general concerns in the small-cap market that often get overlooked when people are focusing on mega-caps like Nvidia stock, temporarily overshadowed the fundamental good news. The market skepticism was deeply ingrained. The massive jump today represents a delayed but far more accurate correction, as traders and institutional investors have had time to fully digest the profit turnaround, the enormous gross margin, and the strong cash flow figures. The volume spike is the most significant technical signal, confirming that major selling pressure has evaporated and has been overwhelmed by buying demand. When you see trading volumes 20 or 30 times the average, it's a sign that hands are changing on a grand scale, and the narrative has fundamentally shifted from a speculative short play to a growth story, albeit a very early stage one. Looking ahead, the future outlook for Motorsport Games Inc. hinges on two primary catalysts, and both of which are mentioned in the earnings call and are now being weighted more heavily by the market. First is the console launch of Le Mans Ultimate. The company is actively working on bringing the title to PlayStation and Xbox, targeting a launch in late 2026 to early 2027. This is a crucial expansion, as the console market is significantly larger and more accessible than the PC-centric sim racing segment they currently dominate. The successful console port could drastically increase their total addressable market and revenue potential for the title, potentially transforming it into a long-term franchise, which is what major investors look for. The second is the company is actively pursuing external investment to support this console development. Securing this funding would mitigate the risk of draining their newly built cash reserves and would validate their strategic direction with a vote of confidence from a third-party financial partner. This is a near-term factor to watch. The company's commitment to expanding their subscription service, Race Control, which is showing its highest performing quarter to date, also offers a promising path towards stable, recurring revenue, a highly valued metric in the software sector, not just in gaming. However, the risks in an MSGM stock remain substantial, and they are tied directly to the execution of these future plans. This is where reality could still fall short of the soaring expectation currently priced into the stock. Any delay in the console launch or a poor reception to the port, if the game fails to translate its high-fidelity experience to the console platform, could undo much of this recent progress. Furthermore, the gaming industry is intensely competitive. While their niche is protected by exclusive licenses, other major players in the sports gaming world or new dedicated titles could emerge. The company is still small, with the current market capitalization just above $21 million, making it highly susceptible to large single-investor trading decisions and broader market volatility that can be influenced by macroeconomic factors or shifting sentiment towards smaller, less liquid stocks, a factor that is less impactful for investors looking at Fidelity ETFs. For those of you who engage in online investing or self-investing through platforms like Robinhood, where fractional shares and easy access to volatile stocks are common, understanding the low-float, high-volatility nature of MSGM is key. This is a trade for those who have a high risk tolerance and a clear thesis on execution, not a core holding. The contrarian take, the one that challenges the current euphoria, is to question the sustainability of this single-title revenue stream. Le Mans Ultimate is performing well now, but the company must demonstrate a clear pipeline of future releases and continued content updates to maintain the engagement and subscription revenue that currently powers their profits. If they cannot replicate the success of Le Mans Ultimate, or if player interest wanes before the console version arrives, the market will quickly revert to its old cynical view. This stock is now trading on the expectation of future execution